U.S. stocks closed with a positive bias as CPI inflation for July comes in at 3.2% versus estimates of a 3.3% rise. Core inflation too rises less than expected. Stocks in the Asia-Pacific trade mixed this morning, while the GIFT Nifty implies a lower start for the Indian market. Oil prices fall as expectations of another Fed hike fade following better than estimated U.S. inflation print. Gold too ticks higher on expectations that the Fed is reaching the end of its rate hiking cycle. And Hero Motor delivers an operationally strong set of Q1 numbers. Margin expands for the fourth straight quarter, higher by 260 basis points on a year-over-year basis. In key earnings to track, Apollo Hospitals and ONGC from the Nifty pack will report their first quarter numbers today. From the broader market, watch out for earnings from Voltas, Hindustan Aeronautics and NMDC. Hey guys, good morning and welcome to this edition of Our Breakfast. I'm Pavitra. Those are all of the top headlines that we have. The big global Q also is now out of the way. The US CPI data has come in and the handover is a little bit positive. But, you have the Asian markets which have moved lower after opening in the green. So now most of the markets are trading with a little bit of a cut. So you have the Hang Seng, which is down 0.2%. The Straits is perhaps looking the worst this morning. That's seeing a cut of around 0.6%. And then you also have the Shanghai markets, which are down around 0.3%. What's holding up? You have the Taiwanese markets on your screen. So that's up around 0.5%. And you also have the Kospi, which is absolutely flat, just a few points in the green right now. The Nikkei markets are shut for a holiday, so that index is not trading. But the GIFT Nifty has also slipped, in the past few minutes, and for now it is indicating that the start will be in the red. We're around 45 points lower on the GIFT Nifty. So that's what's really happening across Asia. But let's also talk about the US markets now, because Wall Street ended Thursday's trading session higher. We saw the Dow up around 50 points. No big gains, but it was, a move in the green. The S&P 500 was flat and the Nasdaq Composite closed with gains of around 16 points. Now, in more news from the U.S., shares of entertainment giant Disney were the best performer on the Dow. So we saw a surge of nearly 5% over there. This after announcing a price hike for ad-free Disney Plus subscription. So that is what took the Disney stock much higher in trade. But of course, the big Q that we've all been talking about is the July CPI print, which came through in the U.S. And the consumer price index rose 3.2% from a year ago in July. And this is slightly below what the street had factored in of a 3.3% rise. If you look at the core CPI, that has also come in below estimates at 4.7%. So we have CNBC's Rick Santelius here with the fine print of all of the inflation numbers. Rick.
Up 0.2%, exactly as expected. And if we look at core, also up 0.2 as expected. And what's noteworthy about this, it's the second month in a row, and I don't see a revision yet, where core is up 0.2, which means it's the third up 0.2 since the highs going back to 1981 were established up 0.8. That was in April of 21. We haven't been at the lower level since February of 2021. Now, let's look at CPI year-over-year numbers. 3.2% on headline, 3.2. That's 0.2 higher than the 3% in the rearview mirror. And that 3% in the rearview mirror was the lowest since March of 21. So that's moving in the wrong direction. And if we look at year-over-year core, arguably the most important data point here, 4.7, exactly as expected, and 0.1 less than the rearview mirror, which was 4.8, which was the lowest since October of 2021.
All right, Rick, thanks a lot for getting us all of those numbers as far as the inflation print in the U.S. goes. So it is slightly below what the street was factoring in at 3.2% if you look at it on a year-over-year basis. But let's also bring you some very important market opinion that we got on the inflation print and, of course, how the Fed could really move at the next policy meet. Listen in to all of that.
Yeah, I think all the trend lines look good. In my view, the high inflation we've been suffering with is largely the result of the fallout from the pandemic on supply chains, labor markets, the Russian war in Ukraine, and its impact on oil and other commodity prices. And as those supply shocks fade to the rearview mirror, inflation is coming in, and gracefully so, in the sense that we're getting inflation in without higher unemployment, without a recession. And as I said, all the trend lines look pretty good here. You mentioned shelter inflation. That's the key. And that's going to continue to moderate because that's tied to rents, and rents are flat to down. And that's been that way now for 6-9 months. And that'll feed through into the CPI number, the consumer price number, for the next 6, 9, 12 months. So it all feels pretty good. My sense is that inflation will be back to the Fed's target by this time next year.
So when you think about what Chairman Powell just said at the last FOMC meeting was very different from the prior one when he looked at the year ahead. You've heard it from other Fed officials, including the president of the Federal Reserve Bank of New York, for example, that if inflation was convincingly headed down in the coming year, that monetary policy need not stay as restrictive. Now, again, that is very much the bull or the dovish case. And how we respond over the next few months to this, whether or not this is a more persistent inflation, is still the ongoing issue. The stock market is taking great comfort from the drop that we had in headline inflation from 9 to 3. We still think that by the end of the year, headline inflation will be a little bit higher, 3.5%.
I think we're past the sticky side of things, because if you look at the CPI headline inflation rate, excluding shelter, which includes that annoying component called rent, we get a 2% increase on a year-over-year basis. If you look at the CPI core rate, excluding food and energy, and then take out shelter, you get 2.5%. So we're actually below 3% on these kind of measures. And so it's really all up to shelter, and shelter has been sticky. But I think it's starting to come down, and it's coming down because it's starting to reflect the fact that inflation on new leases has come down sharply. It's actually down on a year-over-year basis, according to apartmentlist.com.
I think at the Fed, everybody's pretty happy. I think the Fed's ecstatic about this data. I think they're ecstatic about where they sit. I think they probably... we got one more CPI before the next meeting. Assuming that's not a 0.3 or 0.4, they get to sit again. I think they're in great shape going into the end of the year.
All right, that is some very important opinion that we are tracking coming in on the inflation print, and how the Fed could really move from here on. In fact, speaking of global markets, this positive handover that we did get from the US also led the European markets to close higher. So we had the CAC index rallying over 1.5%, so that looked quite good. The German DAX is up 140 points. We saw good gains across the Eurozone region, and the FTSE also closed with gains of around 31 points. So a green close across Europe. But, let's with that get into a short break, because on the other side, we're going to talk about how all of these cues really impact our own markets and everything that you should track from a domestic standpoint. back. You're still tuned into Power Breakfast. We've gone through the global picture, so let's now talk about all of the cues that you should track from a domestic standpoint. We have our research team here to prep you up for this final trading session this week. Nigel, Vivek, as well as Surbhi are all here to take us through exactly that. Guys, a very good morning to all of you. Vivek, coming to you first, take us through, all of the cues that we should watch for the markets today.
Well, good morning. Absolutely a very important trading session. A lot of cues. What's actually happened overnight, like we mentioned, that the US market ended with minor gains, still quite significantly off the session highs. Oil prices too yesterday saw a bit of cooling off, and that's something that is quite positive given the fact that Brent futures yesterday were down over 1% and WTI futures too down close to 2%. Now coming closer to the Indian markets yesterday saw quite a seesaw session with a lot of earnings, a lot of news flow, as well as the RBI MPC policy, and markets reacted to all of that by actually closing quite significantly in the negative, largely dragged down by financials. Financials were impacted by the RBI MPC's announcements of incremental CRR requirements that saw significant selling pressure across most of the banks. Now, result reactions today, yesterday post-market hours, some significant companies, and the reactions there would be important to track: Hero MotoCorp, Concor, Apollo Tyre, amongst a whole host of others. And today, too, some important results that we would be tracking: Apollo Hospital, JSPL, ONGC, ABB India, as well as Hindustan Aeronautics. Now, early morning today, in the wee hours of, today morning, MSCI has gone ahead and released the list of stocks that have been included as well as excluded as part of the August, review. Key stocks that have been included: PFC, REC, Astral, Cummins, Ashok Leyland. Two surprises here, Supreme Industries as well as REC are quite surprising. IDFC First Bank as well as HDFC AMC make their entry into the Global Standard Index, while ACC would be an exclusion. So all of these stocks, to expect them to react quite sharply in the session today.
All right, Vivek, thanks a lot for laying out all of those cues for us. But let's talk about some more of these individual names that, you should watch for in today's trading session. We have Surbhi here with the list. Surbhi, Hero is, clearly the most important one, especially after that solid set of numbers.
That's true. It was the results were above estimates on the operational fronts. The margins were up 260 basis points, came in at 13.8% versus 11.2% same time last year, and it's the fourth consecutive quarter of margin gains. Biocon, the revenues were up 60% on a year-on-year basis. The EBITDA was up nearly 80%. Margins came in at 21% versus 18.7%. Manappuram Finance, again the numbers were a beat when compared to the poll. The AUM was nearly up 21% on a year-on-year basis. The gold loans were up 0.65% on a year-on-year basis, but up 4% sequentially. Honeywell Automation, they saw revenue growth of nearly 19%, but margins have contracted to 13% versus 15.5% same time last year. SAIL, it was a mild beat on the operational front. The realizations were up 1% sequentially. The revenues came in above poll, came in at 24,360 odd crores. The EBITDA came in at 1650 odd crores. LIC, it was a weak quarter. The total APE was down 7.2%, and the VNB margins were largely flat, came in at 13.7%. Apart from that, HCL Tech will also be on our radar today because the company signs a mega deal worth $2.1 billion with a Global 100 corporation. And lastly, Medanta and DLF will also be on our radar because they've entered into an understanding to launch a 400-bed multi-super specialty hospital.
All right, Surbhi, thanks a lot for that long list of stocks. In fact, since we are speaking of stocks that you should keep an eye on, Cipla chairman YK Hamid, in response to 3 shareholders' concerns on stake sale by promoters, said that all reports of stake sales by the promoters are speculative. He said, and I quote, "I would like to inform you as the chairman of Cipla that all the news that you are hearing is speculative and that all the clarifications for this have been made to the stock exchange. And whatever information is given to the stock exchange is in the public domain and public knowledge." Just to remind our viewers, YK Hamid owns 18.68% of Cipla as of the 30th of June, and the Cipla family held a 33.4% stake in the company as well. So that's an important update coming in on Cipla. But with that, let's also move on and bring you all of the cues from the futures and options space. Nigel is here with that. Nigel, looks like the start could be in the red, but take us through what we should watch.
Well, that's right. Morning, Pavitra. The start is going to be in the red, and I think the temptation today is to go ahead and buy the dip, because that's worked in the last few days. It's down close to around 50 points. Maybe if you get a 70, 80 point downtake, the risk reward could favor you with around 19,450 odd as your stop. Let's run you through the data points that came in yesterday. The short positioning yet again did see a build up. So we had more than 11,000 short contracts, and the short positions now go to around 59%. As I always say, I like shorts in the system. That's one of the reasons that you could see a bit of a bounce from there. Now, in terms of the options data, 19,600 call, 19,500 put. Both of them were fairly active. And keep your eye out on the premiums. On the 19,600 call, you add the premium, 19,500 put, you deduct the premium. Which brings us to the levels then. The 20 DMA, well, that's the resistance zone. So 19,650 to 19,670. As of now, the positioning is such that we don't get past that mark. But in the last few days, numerous times, you go down to around 19,425, you go down to 19,450, and risk reward favors you at that particular juncture. The Nifty bank, well, that's been out of form, and that needs to find some form. So that's the broad 900-point range that you're looking at. Currently, it's hovering in the middle at around that 50 DMA odd. So as long as it's holding on to that 44,300 odd mark, you'll say that the Nifty bank is still doing pretty okay. You don't want it to break that mark. Otherwise, it slides down another 900 to around 1,000 points and it will visit the 100 DMA. So the implied start is we start off on the back foot with a cut of around 50 points. Someone will have to put their hand up and get counted. But as has been the trend in the last few days, 19,425, 19,450, maybe you take a bit of a punt and look to go long.
All right, Nigel, thanks a lot for taking us through all of those cues. That is the trade setup as we see it this morning. But with that, it is time for another break on the show. On the other side, we're going to talk all about the action in the commodity space and tell you what's really happening with crude prices. Welcome back. You're still tuned into Power Breakfast, and let's talk about the commodities now. Manisha is here with the update. Manisha, we were just talking about the US CPI print, which came through a little bit below what was estimated, but what has that really meant for the commodities?
Well, it has been slightly positive, Pavitra, and we have seen support come in for metals, for precious metals, and for crude as well. So with all of the data that has been coming in, the crude oil prices are now trading at a 9-month highs. There is speculation of another U.S. rate hike fading away. There are just about 90% chances now that there will be no rate change when the U.S. Fed meets in the month of September, and that has been supportive. Also, there was an OPEC monthly report which is suggesting that the robust demand will continue going forward. So for this year, the OPEC has forecasted 2.4 million barrels per day, and for next year, 2.25 million barrels per day. So that actually is steady growth, slightly lower next year, but this still seems positive. And then markets also are looking at the record Atlantic Ocean heat, which may lead to strong hurricane season, which already has begun and continues until the end of October and November as well. So that also has led to some sentiment buying in prices. This one is going to be a 7th straight week when you are looking at crude oil prices trading on a firmer note. In last 6 weeks, we've seen crude oil prices gain up by 18%.
All right, 18%. Manisha, thanks a lot for getting us all of the details over there. That is the commodity space right now. But in fact, sticking with that, let's also bring you an important word coming in on where crude prices could really be headed. This is from Bank of America Securities. Listen in.
We have a little more upside. We're looking for $90 a barrel average for next year. So heading into year end and 24. I think one big factor that could push us higher, of course, is China. That's perhaps another big driver of this market. Again, we talk about rates, talk about Saudi Arabian cuts, we talked about Russia cuts. But the real issue, I think, what is China going to do stimulus-wise? We saw them falling into deflation this week. On the flip side, the Saudis could unwind the so-called lollipop cut, which so far has been extended a couple of times if prices do shoot up over 90. So I think those are the balancing items there. I think the messaging from Saudi Arabia this week has been more on the constructive side than not. So I think we'll probably end up going maybe overshooting a little bit before some of those cuts are reversed.
All right, that is the outlook on crude oil prices. But I quickly want to bring you an update on the political front as well. The Lok Sabha initiated the no confidence debate on Tuesday, and it was defeated yesterday after Prime Minister Narendra Modi's reply. In an over 2-hour-long speech, the Prime Minister took pot shots at the opposition and laid out what was a report card of his government's performance. He said that the NDA will register a historic win in the 2024 Lok Sabha elections. The Prime Minister said that his government had refurbished India's reputation in the world, calling the India Alliance a congregation of arrogant parties. He added that by merely changing the name of the UPA, it would not reverse the opposition's fortune in the upcoming elections. The Prime Minister also spoke for the first time on Manipur on the floor of the House after several opposition parties staged a walkout. He said that, he was sure that peace would prevail in Manipur and that the central government would not stop in its efforts for the progress of Manipur. So that is an important update on the political space. But
मणिपुर की स्थिति पर देश के गृह मंत्री श्रीमान अमित शाह ने कल 2 घंटे तक विस्तार से और बड़े धैर्य से रत्ती भर भी राजनीति के बिना सारे विषय को विस्तार से समझाया, सरकार की और देश की चिंता को प्रकट किया। और ये अपराध अक्षम्य है और दोषियों को कड़ी से कड़ी सजा दिलवाने के लिए केंद्र सरकार, राज्य सरकार मिलकर के भरपूर प्रयास कर रही है।
All right, that is the word from Prime Minister Modi on Manipur. But with that, we do need to wind down on this edition of Power Breakfast with the news that Asia is pretty mixed right now, largely low over there. And the GIFT Nifty indicates that the start for our own markets could be around 50 points in the red. Thank you for tuning into Power Breakfast. We have Bazaar Morning Call up into.